All right, so this is the trade that I took on May 1st, 2026, and this is during the New York AM session. So, first things first, this is just pre-market, just showing you my thought process going into the day. So, mark out this high. These are all-time highs. We mark out these lows. And this is really important for the day. We have a huge 1 hour bullish fair value gap. And in these conditions, we've already actually tapped this 1 hour fair value gap. So I'm really looking for absolutely zero short positions today. I'm only looking for this long position towards this, these 1 hour highs. This would just be, you need to just find the clear draw on liquidity. Think about how much harder it would be for price to move through all of this just to get to this draw, when this draw is so much easier. And that's just how I simplify my trading. And you just simplify your draw on liquidity, and it's going to be 10 times easier to trade. So that's honestly really it for the 1 hour. So let's move to the 15-minute. And we have this 15-minute bullish fair value gap right here. And I'm going to let the next few candles play. And honestly, I want to kind of highlight this. It's not necessarily the great trade setup right here, but we are respecting this 15-minute fair value gap. And this would be something that you could possibly take. However, I just don't take trades in the pre-market just because I really feel like the 9:30 candle is super unpredictable. Even if it's going towards the right bias, sometimes it will take a move down just to wick people out of stop losses, which is why I don't personally take pre-market trades. But if your strategy works with pre-market trades and you've built the discretion and you've back tested it, then I'm not going to tell you to not trade pre-market. So yeah, I just want to highlight that. So let's move to the 5-minute. And this is 9:10. We have this other 5-minute gap right here. You see, like, that 15-minute trade would have been pretty good. I would have liked this trade if this was in the actual market times. I would like that trade to the upside. But let's just continue to mark out some stuff. We have these bullish fair value gaps that price could potentially go to in order to fuel orders to the upside. All right, another bullish fair value gap. So yeah, we're right here before at 9:29. So this is exactly what I want to see, honestly. Exactly what I was wanting to see before market open. I was like, I want price to tap this 1-minute gap and then make a strong move up. That's exactly what I'd want to see. So we're going to move to the next candle. And there we have it. So obviously on market replay, just because of the trading view, it shows the entire movement of the candle. So this doesn't really look like a good trade because you only have this amount of movement to this draw on liquidity. But just from what I saw in the market, and this is, what actually happened was this 9:30 candle started off as a red candle, made this move down into this gap, and then as soon as that red candle turned into a green candle and pushed to around this price level, that's when I took my trade in the middle of this 1-minute candle, just because I knew from that point that that we had a strong displacement up after hitting this 1-minute fair value gap, which is exactly what I'd want to see if we want to take out this bullish draw on liquidity. So here's where we're going to take the position. It was around there, stop below this point, and may have had a little bit higher when I got into the trade. So this is around 0.98 risk to reward ratio. And this is obviously not the best risk reward ratio, but the reason I still took this with this lower risk reward ratio is it's not the highest quality of trade, but it's a high probability trade, if that makes sense. So I knew from this, we're not going to make that much money from this trade, but I knew I was like 85 to 90% sure that this trade was going to hit. That's why you can take it, even if it's lower risk to reward like that. I wouldn't go much lower than 1-to-1 or 0.98. That's negligible, but yeah, that's exactly what I'll do. So let's go ahead and just hit the trade button on this. So buy market. Hold on, this is kind of... All right, I don't know how this is going to work because it's going to buy up here. Okay, I can buy it right here. Hold on. I'm trying to make it so I can place it right here, but it's not going to work. Let me go back one candle just so I can place this order so it actually places it at the right place. So we have buy limit there. Dude, why is this not moving? Not working. Alright, so this is just not going to work, but I'll just show that the trade hits anyways. I'll just show where I bought it. So I bought it, yeah, obviously right here. Alright, and let's just see if it takes place. Yep, so we take out our take profit hits right here, and I used 4 micros today, or I used 5 micros actually, and this is one of the things that I kind of made a mistake on today, was I didn't realize how close my entry was to the draw on liquidity. Just so there was only like 30 point movement. So with 5 micros, I really didn't make much. I think I made like 300 or something, but that was the one mistake I made. I honestly should have risked like 8 to 10 micros because I was really confident in this trade. So yeah, that hit, and it was only like 300. But that's a big thing that I wanted to point out today, was the importance of not getting upset over small wins. And that's honestly something that I struggled with a lot, and I kind of still do, is we can show it today. Market keeps moving up more and more. So there was that much more profit to be made. I could have made probably like $1,000 off of that movement, even with only 5 micros. And obviously that 1,000 seems way better than the 300. But what we've got to realize is that was the all-time high of the day. So you can't get blindsided by the amount of money that you could have made, because this was the smart exit plan. Because as we know, you put your take profits at points of liquidity, because price could reverse off of it. So that's just a big thing that I think is a big effector of becoming a profitable trader, is that you get mad over losses, and then you get mad even when you win because you're unhappy because you could have made more. But the important thing is the safety. We only took 300 today, but you could have made a winning position turn into a losing position easily. There's no way that we know the market's still going to go up. So you should just be happy with your 300. And if you think about it like this, a 300 win, say you turn that position into a 300 loss. A 300 win compared to a 300 loss is a difference of 600. So, and that's another thing, is not even taking trades is one of the most important things to do. So you should still be happy with even small trades like such as $300, because that was the right thing to do. That corresponds with your strategy. If you start targeting all this stuff here and it's not with your strategy, then that win was not because of your strategy. At that point, it almost becomes luck, and that's what we don't want as a trader. So, yeah, that's what I wanted to make clear today, is just be happy with your small wins, because just winning is a lot better than taking a loss for the day. And there's always going to be more days, there's always going to be better setups. So you should always be happy with the money that you're able to make. So that's all for today. I'll probably make some, I may make a backtesting session over the weekend, but I should be back to taking trades probably Tuesday, Wednesday, Thursday. So yeah, expect videos then. All right, bye.